Yeah, good evening, everyone, and welcome to today uh, video discussion. Yesterday, I posted a question on the group, and I can see that most of the answers are not well seated in with me because what many of us are saying in the group regarding the answer is not really what I'm expecting. So I quickly want to solve the question in a brief way. And after you watch this, you can still come back to me on the group and let me know maybe you understand or you are still struggling to understand uh, my explanation. Before I move on, I need to change some settings here. Um, Now, yesterday, this snapshot is a snapshot I grabbed from financial visualization, which I discussed in yesterday's tutorial video. Yeah, yesterday happens to be 22. If we look at the time, yesterday should be 22 if I don't make a mistake, because today is 23rd. Now, around 10 a.m. yesterday, I tried to check online and that I saw this information from Vin Vinvis website. Vinvis website is a very highly professional website that should be in case we don't want to plot a lot of charts on a lot of indicators and so on our chart. If we are just looking for a clean chart and we do analysis without drawing anything, this platform, the professional tools has been set up for us to know what is happening with some major currency. It takes care of this platform take cares of major currencies, which is about 6 of them, or if I don't make any mistakes, we can count it there: 1, 2, 3, 4, 5, 6, 7, 8 currencies. Yes, major 8 currencies. Correct. It's 8 currencies. So this site is not good for um, exotic pairs. Maybe later in future we'll talk about exotic pairs, but in some of my video on my YouTube channels, I've already mentioned it. You can check what are the exotic pairs. Now, around 10 a.m. yesterday, which I said, I look at this website and I saw that pounds is losing value. And another thing I use is I look at which currency are getting strength. So I realized that USD, Australian dollar, New Zealand dollar, euro are the currency that are making strength. But out of these 3 of them, the Australian dollar is the one that has most strength. And when I look at the currency that are losing value, I can see that is 2 currency that are losing value at the same time. We have Japanese yen and we have pounds USD. These are the 2 losing value. Now, remember, what time am I checking out? I'm checking at 10 a.m. South African time, and 10 a.m. South African time, that is when London markets open. This is when London market open, and in that case, what am I going to do? I can only trade a currency that is very active or viable during London market. And what is the currency? We have 2 currency during London market, which is pounds, Great Britain pounds, and euro. So anything I want, any pair I want to trade must have any one of these two pairs. So having knowing that, so in this case, I pick pounds and I picked Australian dollar. Now, Australian dollar is having weight while pounds is losing weight in the market are in London market zone. So good. So and you remember, if you want to write this, we are going to write it as pounds slash AUD. In this case, pounds is what? Pounds is a base currency. We call it base currency. While Australian dollar is what? Is called a quote currency. So you have to know this, please, guys. You have to know how to arrange. You don't just arrange currency. The most heavy currency will always be at the left, or any currency you see at the left side is called base currency, while the one on the right side is called quote currency. What is the meaning of quote and base currency? Let me quickly tell us. Now, you remember that when we write this, GBP AUD is equal to 1.5223. This is just an example. That means we're going to buy 1 pound, 1 pound with 1.5223 AUD. That's the meaning. That means this is a base, pounds is a base, where we are quoting, where Australian dollar, we are quoting pounds, 1 pound at the rate of Australian dollar. That's why Australian dollar is a quote, it's a quote currency. So now, having knowing that, because it's a very vital information we need to know. So having knowing that, what are we going to trade in this kind of situation? Pounds is losing value, Australian dollar is gaining value. You can go and test the remaining, this remaining New Zealand and Euro USD. After this lecture, you can go and look back on your chart and see what we are talking about. Now, this is around 10 a.m. London market. So now, what are we going to do? If pounds is losing currency, losing weight, and Australian dollar is gaining currency, which direction are we going to go? Because remember, base currencies are pounds and our quote currency is Australian dollar. And Australian dollar, when it's making wave, when it is stronger than pounds, that means we need small AUD to buy pounds. That means what happened? The market will go down. That means we need to sell. This is a sell direction. This is a sell direction. We need to go to sell. We need to short the market because this currency, Australian dollar, is higher than pounds, and we need a small Australian dollar to buy pound. In that case, we need to sell. But if otherwise, let's assume that pounds is greater than Australian dollar. Let's just assume that pounds is greater than Australian dollar. That means we're going to need more Australian dollar to buy pounds. In this case, market is going up. That means we need to buy. You have to understand how to interpret the market. So, having knowing this, in this kind of scenario, we are going to short, and let's see if truly during this period market is really going down. Now, this is a chart that I've tried to draw for us. So now This is yesterday was 22, like we said, like we agreed together, and this is the chart of yesterday, which is 22. The chart is going to start from here. You can see this is 22, which is yesterday, and this is pounds. This is pounds USD chart, pounds AUD chart. And what are we seeing between midnight, which is this is midnight here, and till around 11 o'clock. This is around 11 o'clock, because you can see immediately after 12, Australian dollar lose value. And what happened? Market starts going up. But before that, which is in the morning, what we are targeting now is when the this website gave us that information. Then what happened? Market is going down. That means we are selling. And this is where the information is very important. That means if we see something like this in future, what do? We quickly follow the market trend and do what? And sell. As you can see, pounds is weak, Australia is gaining weight. That means we need small Australia to buy pounds, and that means we are selling on the chart. And you can see that the chart is giving us selling. The chart is giving us what? Selling direction. Now the chart is giving us selling direction. You can see the market is going short between that time. And before the market close and come to today, because you can see this line is the midnight of 22/23rd, because at around 12 noon, market changed direction, pound started gaining weight, Australia started losing weight, and what happened? Market goes up, goes bullish. So this is how you use this VinFace website to analyze and to know the direction you have to go in the market. I think this has clear the question that the question I asked and the answer that you guys are giving to me. I think this has cleared it. Then we need to go to second issue that we are discussing in the morning about what we call exposure of capital. I think Mr. Andrew will really need to, and Madam Babalola, both of you need. I did this because of both of you, the question you are asking about the exposure. First, let me tell you something. In my own trading method, I don't do what other people do in the market. So that is why we are using edging software. This is my live account. You can see this is it today. I just grabbed this screen. I just grabbed this account for us as an example. This is 23rd, and I grabbed it around 9 p.m. just now before I start the class. Then you can see for security reason, I need to hide this. Even my name is supposed to be hidden, but it's fine. Now, let me now analyze my trading statement today to answer your question that you have been bothering about. Now, first, all of you have not started using the software, because I just want you to understand this basic so that you can use the software on a solid foundation. I normally instruct the software to come to the market around midnight. You can see this is 1 o'clock a.m. when I'm in the bed. Then I trade between that time I trade between that time till around something 9 a.m. every day. And if you look at all this today, you can see that the software was in the market till around this is the last one. Okay, look, this trade, there's a trade here which is a sell stop. This sell stop closed around 10 a.m. and yeah, this one too closed around 10 a.m. These two trades are the trade that the software pair is a complete circle. Don't bother yourself about complete circle for now. When we get to the analysis of my software, we are going to talk about that. Now, but I trade between 1 a.m. every day to 9 a.m. London up, an hour to London open in South Africa. And if you look at these hours, that is 2, 3, 4, 5, 6, 7, 8, 9. There's 1, 2, 3, 4, 5, 6, 7, 8. That is 8 hours. I instruct the software to trade just 8 hours, and when I come back from work, I just check what really happened. So now, having known that, this is the profit that came in today. Sorry, this is the profit that came in today in the account. Now, we are going to use this profit now to do the calculation of how much did the software expose to the market today. Now, let's scroll down. We are going to get answer somewhere here. Today, if you look at my maximum drawdown, that's why I said it in the morning, that the way we are trading is different from the way other people trade in the market because the kind of strategy I'm using. If you look at my maximum drawdown today and relative drawdown today, they are the same thing anyway. This shows in my account, I exposed 4.78% of my account, 4.78% of my account to make a profit of $150, $152. I think we are getting what I'm saying here. Okay, now that means I exposed, like what we have been asking in the morning. The software exposed, because I don't trade, I fold my hands throughout. The software exposed 4.7, which is $877.85 to the market, and I make a profit of 152. So now I think this will have answered the question that we are asking in the morning, that I have 500 in my account. Will I expose everything? Wouldn't that expose everything? This is how the software works. You know, in other strategy, they will tell you use 10% of $500, expose it. Then when you expose 10% of the $500, you make something back. Our own system doesn't go that way. That's why we have unique way of attacking the market. Now, how much do we have in this account? The account has, this is not where I'm going, but I just want to show you something. This is what I have in this account as at this night. This is what I have in this account, with addition of 152, which we make today. Now, having known that, let me quickly do something here. we need to calculate something. Okay, this is my calculator. Now we have done that. Then let's see, we expose how much to the market according to what we calculate here. We expose 877.5, which is translated to 4.78 to the market, and we make profit of 152. So what is the percentage of our profit based on what we expose out of our capital? So that's what we are going to calculate. So this is our capital, this is what we expose. So it will be by virtue of calculation, let me just put it this way. Our capital is 877.85. That translated to 100% of what we use, and our profit is $152. We want to know the percentage. So 152 times 100, that is 152. 152 times 100, 152 times 100 equals this. Then we divide it by 877.85. Then we get this. That means we got how much back? We exposed $887.85. We make profit of this, which is, at least we make 17%, 17.32% return on our risk, because this is what we risk in the market. We risk 877.85, and we came back with this profit. That means we return all the 877.85 we took from our account, we return it, and this is excess. 152 is excess. So in a nutshell, it depends. Sometimes, some days, market can take 20% of your account. The software can take 20% of your account and give you return. Some days it may take lesser percentage of your capital to trade. But this is how the hedging strategy that we are going to build our trading investment on. This is how it works. Please, if this explanation is not clear, please just tell me. I will take my time and attend to whatever aspect that is not clear. Thank you, and bye bye for now.